We now turn to a more entrepreneurial vein, and our next panel, which I'm excited to hear, is called Better, Faster, Cheaper: How Data Analytics Change the Game in Financial Platforms. And it's moderated by my colleague, Professor Melissa Schilling, and she's the Herzog Family Professor of Management. And this brings together three fintech founders who are operating at the forefront of AI. So Professor Schilling, you can introduce your panelists and welcome.
All right, thank you, Kathleen. Can everybody hear me okay? We're good? Good morning, everyone. Super excited to be here. We have such a cool panel. This is a practitioner panel with three startups founded by with their founders. So that's exciting. We have Ofer Shapira, who is the CEO and founder of Soteria Market. We have Einat Steklov, who is the founder and CEO of Kashable. And we have LD Salmanson, who is the founder and CEO of Cherre. So you're going to hear from the horse's mouth how these people have taken data analytics and artificial intelligence to unlock value and basically create new products and in some cases whole new markets. So we're going to start and have each of these founders give you 5 minutes or less about their company, what it does, what inspired them to start it, and then we will take it from there. And we've got some other questions about how it unlocks value for customers and what the future holds. So Ofer, without further ado, why don't you take your 5 minutes or less?
Hi, good morning. Thanks for having me. Well, I think the best start is to say a few words about the industry. The most basic transaction for a bank is lending money to customers. So a bank lends you like $100 with 5% interest. It means that next year you need to repay the bank $105. It also means that if the bank wants to get the money before that time, he needs to find another bank or another investor to sell that note so he can get liquidity. So it sounds maybe unusual, but actually banks in the US are trading trillions of dollars, and actually the mortgage industry in the US is built on trading loans. The challenges in trading loans could be mostly in locating who could be the good buyer, but also what is the price that you could charge for whatever you sell. If you're a good borrower, maybe the bank can charge a bit more than what he gave you because that could compensate him for the work. But if you are a bad borrower, maybe no one will agree to pay that $100 to the bank, and then he needs to what is called haircut. He needs to give up on some of the money. The investor will try to collect the money from you. So now we're getting to Soteria Market. Soteria Market is a secondary marketplace that allows banks and financial institutions to trade illiquid assets and those loans in a very, very discreet and efficient way. It finds actually the right buyer for each type of loan for the banks, and it does that in a very discreet way. So both parties remain discreet until the right moment for them to be exposed.
Is it kind of like Match.com then for buyers and sellers of loans?
In short, it's like a dating site for loans and distressed assets. It learns your preferences as a buyer. It learns what you're looking for. It learns what deal you are typically pursue and how likely you are to close the deal. And then it matches you to those deals that you are more likely to pursue. It works great for buyers because in fact, it works like your music app. If you like something, you'll get more of that. If you don't like it, you won't get any of that. And if you stick with us and give us the right feedback, with the time, we can actually bring you deal flow that is actually curated according to your preferences. And it works great for the buyers. It works great for the sellers because they don't need to spend so much time with buyers that are unlikely to pursue the deal. So,
that's so cool.
In this way, it provides a lot of efficiency in the market.
But how did the market work before?
Well, the traditional way of doing that, first is you could try to do it yourself, like phone calls. If you try to remember your father's insurance agent or someone that knocks on your door and offers you things to buy. So in this way or another, intermediaries are playing a big role in this market. There's a challenge of confidentiality. So banks cannot just post the fact that like information about the borrowers, and therefore sometimes they need to have like whatever, a machine that until now was in a shape of an intermediary. It could be like investment banker or broker, and that was the way to do that. And the other way is just not to do anything. I've been a bankruptcy lawyer for many years, and many of those loans were just kept and gone.
So it was human mediated before.
Definitely.
So it's going to be a lot faster. Yours is going to be faster and cheaper for sure.
Definitely.
That is so cool. I can't wait to hear more. Einat, why don't you tell us about Kashable?
Sure. So Kashable is a financial wellness program that companies add into the employee benefits package, similar to how they add healthcare, insurance, type of critical illness, life insurance, disability, or even retirement plan. Once the company put it in, employees have access directly to Kashable. The market in the United States is such that half of the adult population is prime credit and the other half is not. But in the labor market, 2/3 of the people that bring a steady paycheck, whether it's weekly or biweekly, 2/3 of them are not prime. It's a big market. There's about 140, 150 million Americans, W-2 type of workers in the United States, and 2/3 of them are not prime. It means that around 100 million people, 100 million consumers that have a steady income, that have a steady employment, are not able to access loans from credit cards, from SoFi, from Marcus, from their bank, simply don't have access. This is where Kashable came in to solve that issue. And when we looked at that, we said to ourselves, there must be a better way to underwrite consumers, to be able to make a decision on whether or not that particular individual has the ability and the willingness to repay back an unsecured, uncollateralized loan. And for us, the answer was with alternative data. While the rest of the lenders in the United States are looking at credit scores, and each one of them has their own box for a credit score, whether you want to underwrite or you want to give loans to the top, the super prime credit borrowers, or you want to do that at the lower end of the market, it doesn't matter. You have a box. For Kashable, we do not have that credit box. We're looking at an alternative data, which is the employment information. And employment information goes way beyond what is your income. If you think about any one of you that took a mortgage or that financed a car, the lender would always ask, what is your credit score? Do you have good credit? Do you have poor credit? And that's how they place you on whether or not they're going to give you a loan. For Kashable, we actually start with the employment information. So once employers put in Kashable for their employees, we integrate into the HR system and we receive employment data directly from the source, from the employer. We don't ask people, show me the last 3 pay stubs to verify your employment. We actually have very rich data around your employment, and we underwrite consumers based on that data. Now, we don't ignore credit altogether. We actually enhance the credit profile with employment information. So if you are a super credit score borrower, you're good. We will do better than the regular lender because of efficiencies, because of the way the model works, but you're good. But if you don't have that super credit score, the employment data that we pull directly from your employer will enhance this information, your credit profile, and overall your risk profile is changing from poor credit to a good borrower. So overall, we're able to approve a very high percentage of applicants. We build up our loan engine on an algorithm that think employment. The whole process is happening on the Kashable side. And then at the end of the process, the employees authorize their employer to take a deduction from their payroll, directly from the payroll, to pay Kashable. What it does is it enhances the behavior of consumers. And if you think about a payroll, this is the most predictable thing that we can actually attach ourselves. A payroll comes in every week, every other week, no matter what. It comes on the same time. It comes, it's reliable. What it does is that people actually pay their loan on time, every time, and Kashable reports it back to credit bureaus. So at the end of that cycle, over 60% of Kashable borrowers saw an improvement in their credit score. And that's significant. That improvement, around 50 points improvement, is the difference between going to the Verizon store and bringing cash in order to buy your next iPhone versus paying it on a payment plan. It's the difference between putting 1 month of security deposit on your new rental versus 6 months. This makes a difference in people's lives. And that's the way we actually at Kashable view ourselves, as transforming the way working Americans actually access credit, and also changing a behavior in order to give the consumer here the power to improve their well-being over time.
So more people have better access to finance at a lower cost, and they're building their credit. And in a way, you're taking advantage of the fact that now, instead of a relationship with some bank that I may not care about, you're also leveraging to some extent the relationship I have with my employer, which is probably a relationship I do care about. Is that part of it?
Yes, and not only that, you as an employee care about it, the employer cares about it, because suddenly the relationship changes. Over time, we could see with employers that have been with us for many years now, we can see that they have higher retention than their peer in the industry. We can see that people are taking less loans from retirement plans, which allow them to retire with the lifestyle that they were planning on retiring. So we can see that there are many soft benefits, not only to the individual that takes a loan from Kashable, but to the employer, and the relationship between the employer and the employees are definitely enriched and better when you have an engaged employee.
Yeah.
And that's part of the deliverables.
Thank you. Thank you so much. LD, why don't you talk to us about Cherre?
Thanks for having me. It's good to be here. So Cherre is a data management platform specifically designed for real estate. And what we do is help our clients, the largest asset managers, banks, insurance companies, a little over 3 trillion of assets under management, connect all their disparate data to a single source of truth. And that means internal financial and operational data, external market data, a lot of loose files and things of nature, into a single source of truth in a reliable, consistent, accurate, and timely manner. Then make that data available to both technical teams, so folks trying to build applications, or more often building advanced data science models, or folks on the business side of the house trying to answer very simple questions or seemingly simple questions. And that typically either involves something on the buy side of the house or underwriting, trying to understand markets, submarkets, opportunities, and how we might perform better than our peers, right? Things along the lines of, given everything we know about the market, given everything we know about our past decisions, given all our assumptions, what's the most likely statistical outcome given these certain decisions? And then on the management side of the house, trying to understand things like, what do I own? Where do I own it? How is it performing versus underwriting versus peers? And trying to inform those decisions in a more data-driven manner. We've obviously been growing very fast. It's great to be here today and look forward to diving in.
Oh, that's awesome, LD. So Aileen was in the previous session was talking about a knowledge graph. And I think when I was talking to you about your company before, you were describing sort of a network structure of knowledge. Could you tell us something about that?
Sure. I think the panel before talked a little about at the end of how much advancement in knowledge graph has contributed to the data science community. And we do a lot of work in knowledge graphs. Specifically, I feel that we use machine learning very heavily to try and fill in blanks, right? So try to understand when I don't know something, but I have a lot of other information around it, how might I try and infer certain information from the information that already exists, right? So maybe in a simplistic way, I know the floor above, I know the floor below, maybe I can try and understand the square footage of the floor in between, right? And we use machine learning for that. What we use knowledge graphs for is trying to retrieve that information, both very quickly and also understanding relationships between different points of information that might not be obvious, right? So a great example might be the way we unmask ownership in our knowledge graph, right? So once we've mapped all that data, we're starting to look at different types of nodes within that graph, and we understand they have similar semantic neighborhoods. And then these things are candidates to maybe being the same owner of property. So maybe one might say 123 LLC Main Street, another one might say 146 LLC Main Street. And I can see these two things seem to be very similar in the way that they're both owned and have other relationships that seem very similar. Maybe I can understand these are actually the same entity. And that might help me understand, oh, I know what Blackstone now owns, or I know what Brookfield now owns, which otherwise would be very hard to unmask through these all large networks of LLCs. And obviously run more sophisticated things like node-to-vec models and things like that that allow us to really understand really cool things about the world that otherwise would be really impossible. We are the largest knowledge graph in the world for the built world. Second is actually Walmart. So I'm proud to say that we're collecting and mapping more data than Walmart these days. I don't know if we're using that data as intelligent as I'd like to, but I think we're doing a really good job.
That's a pretty big claim to be able to make. And I know that we've got Foster Provost sort of sitting quietly in the background here, and his ears, I'm sure, are just all pricked up now at all of this information because he does a bunch of work with Compass on their data analytics. So let me go back to Ofer and ask, so we know that a lot of times artificial intelligence and data analytics are being used to make processes faster, more automated. But is that the primary way that they're unlocking more value, for your company, for example? What are some of the ways that using data analytics or artificial intelligence unlock value that wasn't there before?
Well, there are some levels, and actually we see that in so many areas. So I will just give you a few examples. First, I said before that it learns your preferences. That means necessarily that it saves you a lot of time. Obviously, you could say, I would like to see everything, but in your business life, you don't have time to see everything all of the time. And however curious you could be, you want to focus on things that you are more likely pursue and turn into real deals on your table. So learning your preferences and understanding what your next deal would look like, or how likely you'll do the next deal, and that thing could obviously change with your behavior. This is something very, very valuable because first of all, it serves yourself as a user. It serves yourself as a buyer. Second, it obviously means that you don't need to be exposed to things that on the face of them you're not going to pursue. I will just give you a very short example. Let's assume that you are a buyer that has some sensitivity on environmental issues. So there's no point for me or the seller to show you deal that involves anything that is related to environmental issues, because in the end you're not going to do that deal because you are too sensitive for that. So by not exposing you to the deal, I don't need to explain to you why it isn't for you. I don't need to expose the borrower or the bank because you are unlikely to that deal. So that provides a lot of efficiency. It also adds another layer of confidentiality to an area that needs to remain confidential unless you want the deal to be pursued. The other thing is that by understanding the use of the information by the different users or the likelihood of them doing the deal, it allows you to predict the probability of a certain user pursuing a deal, which means that both parties can dedicate the appropriate time or maybe prioritize those who are more likely pursue that deal. It doesn't mean that a newcomer cannot join and start dealing as well, but it means that it learns the way you act, like how much time it takes you to close a deal, how much time you need financing for that deal, how likely are you going to close deals that you signed or you started or you entered into. So there are lots of things that as humans we do track, we do learn how our peers are acting, and with our knowledge we can say, hey, I know this person, he does this and that. So just imagine your mind that is broadened to many more minds and actually tracking and remembering the patterns of every user that you are transacting with.
So if banks before couldn't just post this somewhere and they were using investment bankers, then I imagine any given loan that was for sale was only exposed to a really small number of buyers. Now you get everybody on this data platform, and you must be able to potentially expose a deal and consider to hundreds of buyers and channel the best buyers to that deal. So you ought to get a tighter match between preferences then, right?
Right. I used the image of a dating site before, because you don't need to expose the subject of the deal in front of the other party if that party is unlikely pursue that deal. So you could say in any case, I could just post everything and let everybody knows. But in the financial industry, it's not only unacceptable, it could damage your own reputation. A bank is not in a position to posting things related to his borrowers. It's not only damaging the reputation of the borrowers, it's also damaging the reputation of the bank. So usually those deals are done in a discreet way. You can find some platforms that offer, I would say, exposed information related to real estate, because in real estate sometimes the secret is not such a big secret at some point, at least at some point. But at any rate, the way the platform works is a very discreet way, and it allows to do that efficient work of getting to the big audience without paying the price of losing the confidentiality, which is so essential in this industry.
So
I just wanted to add another point, because LD said something very interesting about collecting the data and putting some order in the data. And I think one of the advantages of Soteria market is the ability to track the relevancy of the data. So you could say that you care about, he said, like square footage, which is obvious in real estate. But let's assume that there's a measure, some measure that you want to add into your calculation, but some buyers do not care about, others care a lot. So it's not only the technology allows you not only to collect a lot of data, but it also allows you to recheck and again the relevancy of each type of each point of data, and make sure that you're putting it in the right place in the calculation.
Okay, we're going to get tight on time here, but just in as short as possible, are you getting a lot of buyers and sellers signing up on the platform?
Yeah, we see a lot of excitement around that, and again, I've been a practitioner in that space forever. Like I've been selling distressed debts and problem businesses forever. Again, the issue has always been to find the right partner and to find that in a discreet way that will not ruin the business. So we see a lot of excitement, and it's really cool.
Cool. Congratulations. So I want to ask LD something that relates to what you just described, and that is that it sounds like a big part of the value Soteria is offering is that it's pooling all this data that didn't used to live in one place anymore, and enabling, then the machine learning or the artificial intelligence can do the matching and between players in that big pooling of data. What's not obvious to me yet, so maybe you can explain it to us, LD, is if you are pooling data across different players that allows them to make queries where they get better answers because they're getting data from lots of different players, or is this knowledge structure something that has to be sort of a walled garden for each player?
Yeah, it's a good question. The answer is a little of both. So we really power only the largest folks in the industry, kind of Fortune 500, 100 companies. And for them, data privacy is very important. And the idea of them having that data potentially leak from their environment to another environment is something they would never accept. So not just because of business reasons, also for compliance and regulatory reasons. So we typically don't allow data to flow between clients in any way whatsoever. That being said, we use that data to inform us about a lot of other things. So for example, we use the metadata that we have from clients to be able to understand what they call certain fields, what they call certain properties, what they call certain objects that might be interesting in our world. And that informs our entity resolution models that allow us to say, well, these two things don't look similar in any way, but we can say they're the same thing because we have enough information to be able to discern that. That's our core IP, right? That's what allows us to be able to understand how the world connects to each other in ways that are not obvious. That being said, I would say one thing further. Let's say, for example, that we pulled down all the walls between our clients and we had perfect data. And we could, in theory, do that. We do have that rights a lot of times with our clients, even on aggregate. The last thing we would want to do is create a situation where we're in competition with our clients, right? So let's say we had all that data. What would we do with it? Sell it? That'd be a really bad thing. So if you had perfect data, selling it feels like the worst use of that data, right? What's more exciting is actually building really sophisticated models. And that's what we do with clients, and be able to capture some of the alpha that we're generating for them, right? So our clients, in a very simplistic way, will say something like, we're trying to do Moneyball for real estate. And what they really mean by that is data-driven or data-informed decision. What is the most likely statistical outcome? And leave very little room, perhaps, for instinct, gut, which is very, very common in our industry. And by doing that, what we're doing is helping them find the most likely opportunity. And then when they do that, we're able to generate alpha that otherwise they would never be able to generate, and then capture some of that, which is, I think, a better use of data.
Well, that's super cool. That actually brings me to a question I want to ask Einat, and that is that given that you now have this different way of looking at potential borrowers that you're finding that can be more inclusive, is there any possibility that Kashable would end up selling that data or that metric to other types of borrowers, other types of lenders, sorry?
So this is the proprietary data that Kashable develops. And right now, the market is so big for us to achieve that we have no interest just to sell the data per se. But you have to think about what is the usage for other lenders. We actually looking at that and say, we're not only underwriting the consumer that knocks on our door, we literally underwrite their employer and bucketing that employer, where we look at a school teacher, for example, that comes in. We have richer knowledge of the behavior of what we expect that school teacher to behave while they're employed and maybe even after they are terminated from employment, versus an employee of a retail store, a store associate, that we have an understanding of the behavior of these people, because we believe that they're going to behave similar to the way their peers behave. So we have a much deeper understanding of the consumer when they come, because we look at the more richer data and we analyze that data, as opposed to a bank that school teacher came in with the same credit profile of the store associate, and they don't know how to differentiate between them. So the short answer is no, we're not looking to sell the individual data, but yes, we are thinking about all the understandings and the knowledge that we gain on the model overall, and think whether down the road there is a place for different type of indexes, different type of scores, which are not just a credit score, but more of a behavioral score that incorporates more data points into just a credit decision.
So in the future, do you think more people are going to be accessing financing almost as a benefit through their employer with a service like Kashable?
Yeah, I am a believer that we see more and more embedded finance in other everyday life activities. So if you think about the buy now, pay later, we used to go to a store, buy our product, and maybe pay it on a credit card, or maybe borrow money in order to make that purchase. Today, we don't have to do that as two separate transactions.
Yeah.
We go to the store, to the online, or even when we go to the store, we already have embedded finance in it. What Catchable is doing is embedded finance into employment. And we see more and more players are trying to get into this market. It's not an easy market to get into. HR, if you think about the HR person, they are risk averse, they are conservatives. Nothing good can come out from very aggressive innovation. But if there is one complaint, they're doomed. So they are very conservative. They are not opening the door very easily. They are vetting us. It's a long process of being vetted by employers before they're putting us in. But right now, we are a believer that this is the way that the market is moving into embedded finance in many different places. And the employment, the paycheck, is definitely one of them.
Okay, so in 1 minute or less, LD, what do you think the future looks like? Are other industries going to adopt this data model that you're using?
I wish I could say that we're a novel idea. I mean, first of all, we've started the founding team, other companies in similar spaces successfully in HR and late stage pre-IPO data. So we're following a similar type of play, and we've seen similar things happening in healthcare, which I think are very exciting. So I don't think we're novel in that sense, but I think what's more exciting is how we get to use the data in the future in ways that we couldn't in the past. You mentioned Foster. Just a few years ago, some of the folks on his data science team gave a talk at our conference. I'm talking about a likely to sell model. And today they've announced pretty recently a likelihood to close model, right? So we went very quickly from what is a likelihood of an asset to sell in a near period of time to a very more accurate kind of model, which is what is likely we actually close this, and where should we spend our time in a very, very short period of time.
Yeah.
Our clients are trying to think about things like which markets are we going to outperform our peers and why, and how can we get into those markets and at what price, right? So that same likelihood to close, also think about that as in bidding wars, right? What number should I put out, which is most likely to win that bid, and how can I get there faster than my peers? Just one of many examples.
That actually sounds like a service that would be really useful for Ofer, because isn't that kind of what your business does, is try to predict how quickly you can close a deal and set up transactions that will close quickly at a good price?
Definitely. I think with the time, we're definitely moving toward an era that people will meet more the business partners through technology and through data analytics, and less through gut feelings and necessarily intermediaries. I think the generation changes, and in our industry, trades of illiquid assets in the end, they will be done on platforms like any other trade. You don't sell your car by calling people asking them to buy. You're not buying your whatever next bike by calling people asking them if they want to sell their bike. There's no reason, if you sell $100 million loan, to do that by calling people and asking them to buy your whatever inventory. The last point I would say, that there are some sayings with respect to AI that they replace people. I don't think in the long run they replace professionals in this industry. They will just enable people to excel and do things that they cannot do today, because humans don't have the same processing power as machines. And while the machine could do the processing and what we call the legwork, the humans could have the human touch in the end and close the deal.
Okay, thank you guys so much. This was a fantastic panel. I learned so much, and I'm sure our audience did too. And we look forward to hearing big, big things about all of you.